BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
You said it. You finally said it.
I'm so bullish.
Andy's bullish. I'm bullish. We're bullish. We're going to the top. We're on 4th floor today. We're going to be on floor 1, and then we're headed straight to the moon, boys.
Yes, sir. Happy Wednesday. Happy hump day.
Hump day indeed, brother.
Sorry for all the crypto holders out there today. Sorry, guys.
I was, I was thinking about you yesterday because I was listening to Elon's podcast. What just happened? Yeah, I see that. All right. I got a little excited that I was thinking about him. I think you can still hear me. So I was thinking about you because I was listening to Elon's podcast that he did with the Stripe founder, the Cheeky Pint podcast. And he goes on there and he explains the strategy and the plan behind SpaceX merging with XAI, and then also why they're going to build data centers in space. And he was essentially explaining how, I mean, I think this is well-known information, but Elon's a big solar bull. And I was just thinking to myself, if we're going to send satellites into space, Elon's trying to build this colony on the moon to like send, power plant satellites up there to harness more solar energy. What does that mean for nuclear on Earth? And what does that mean for uranium?
Bullish for uranium, man. I'll tell you that much. It's freaking bullish. They're going to be mining that thing. It's down today a little bit, but this is a multi-month play, multi-year cup and handle.
I'd like to make a side bet that you don't last in the uranium position for longer than 3 months. I think I think I would have to give you better odds at 3 months. I don't think
3 months.
I don't think you're going to last more than a month or two in this uranium position.
It's dumping snow out here. The vibes are up. So much has happened since the last 24 hours.
we were totally spot on about layer zero. This hair is almost gone. I'm about 2 weeks away from getting this thing shaved off.
You got something scheduled?
Nope, but goddamn it, does this thing need some work here? All right, man, let's go.
Let's go.
Rumor mill was firing. We were totally right about layer zero. That was exciting. Missed a couple things, but
pretty interesting to see the entire industry rally behind layer zero.
Tweeting about it, right?
Oh yeah,
it's kind of a lot.
It's I mean, they obviously went all out. They were able to harness the attention. I'd say that. I mean, look, they were the biggest thing yesterday. Unfortunately for layer zero, now there is something that happened today. So let's bring up our first headline.
Right? Isn't that funny? Yeah, I mean, I had Brian DM me saying thanks for the shout out. That the first tweet was a bit rough for them to manage, considering it was 2.5 years in the making, and it just kind of came out of nowhere from my Twitter account before they had the chance to announce it. But he ended up being grateful for the marketing support, and yeah.
That's great. Yeah, I mean, Brian's a friend of the show. He's been on a couple times. Look forward to hosting him again.
I texted him back. I was like, dude, wait till you see what we have in store come March. I think our last podcast, I was in some Brazilian shithole. Just wait till we do our next one, and he was like, I'm stoked. So good vibes. Okay. So then that coin's ripping. That's
a good one. And then obviously the other one that's ripping today is Uniswap. So our first headline here is that BlackRock was at the Bank of America conference. We can scroll down on this because I think we have obviously the more relevant BlackRock news, but let's pause here. Just some notes about BlackRock. They achieved an organic base fee growth over 5% over 6 consecutive quarters, reaching 9% for 2025. Obviously their crypto ETF products are massive.
$530 billion of organic asset growth for those ETF products.
So this has become a massive revenue driver for BlackRock. Obviously, this was a massive $1 trillion company beforehand. They are only growing with the adoption of digital assets. The company targets $400 billion in fundraising for private markets and alternative by 2030. BlackRock is exploring digital wallets as a new distribution channel and tokenizing its entire ETF suite. Now we're seeing more of the infrastructure become available for BlackRock to tokenize more of its ETFs, more of its money markets, and for those to become more widely accepted and composable with the rest of DeFi. And I think, something that they didn't have to do that blew everyone away was them buying Uniswap, because not only are they using the underlying technology, they are buying DeFi.
That's pretty crazy, right?
They didn't have to do that. I think this is just a signal that they are deeply invested in this space. They believe in it. They're going to continue to use it, and they want to be exposed to the upside as they pour more capital into these protocols.
Yeah, I mean, why don't we get onto that? I think that it was pretty significant. We also have quite a bit of rumor and chatter around what's coming out of the SEC newsroom. That pertains to this. I think we'll cover that more on Friday. But yeah, I think that this is a huge first step. Token ripped. So let's get into that.
Yeah, so let's keep going. I think that is a little bit later to the end of the docket because it came up right as the show was starting. So let's move on. We've got some things to get through before we talk about everything BlackRock, securitized Uniswap.
What's the chat saying? App chain thesis is back. I bet Uniswap really starts to lean in on beefing up their Uni chain. Uni chain will probably pivot to their own L1. I have zero speculation on that. Sup, fellas? Good call out on layer zero, Andy. Long dip before the announcement. Nice pump.
Love to see that. Keep watching the roll up.
Yeah, that thing dumped as my tweet came out, and others piled on. That thing nuked, and then that thing just ripped 45% in 24 hours with size. Like, you get size on it too.
Oh yeah, it's a top 100 coin. Another coin here that had some size. Hyperliquid's permissionless perps hit $5 billion in daily volume.
Yeah, what a move,
frenzy fuels record activity.
I just keep buying. I think I'm actually calling out that hype under 30 right now is, I think, we're in a really peculiar spot, right? We're like, we're either, going to put in a bottom here under 30 because this is happening. HIP4 is coming out. Things are going to be super exciting. And hype's a generational long here at 28, 29, up to the top of the range. Or just like a long-term hold, which I think I'm kind of positioned for both. Like I'm positioned for long-term hold, and I'm positioned for let's try to get this thing back up to the top of the range and see if we can make some nice bear market, a little quick flip in the bear. Not my specialty, but yeah. So I mean, I think this is what is the exact numbers here? $5.2 billion of daily volume in just 4 months of being live. HIP3 silver perps dominate 50% of HIP3's volume is in silver perps. Silver, NASDAQ index, gold are the leading ones. And yeah, these underlyings follow TradFi hours, and the weekend closures affect volumes directly, but you can still trade on the weekend, just not really much going on. Hype under 30 is a gift. Eating Coinbase lunch. Yeah, if you also look,
the thing about Coinbase is interesting. I mean, trading volume, you've got Coinbase at $1.4 trillion notional, Hyperliquid at 2.6. That's a 50% more volume happening on Hyperliquid than Coinbase.
In terms of what time frame?
In terms of notional volume overall. That's trillions. That's everything total. 1.4 for Coinbase, 2.6 for Hyperliquid. That's from
okay. That's just because Coinbase just launched perps in this like because Coinbase's spot trading and Hyperliquid is been how you can trade 100x perps on it. Like
I don't think that's just perps.
Okay, well, you fact check that because that sounds crazy considering Coinbase has been out since 2017. I find that hard to believe.
Oh, it's not all time. This is so year to date.
Okay, that is very believable. Yes, that's very believable.
Okay.
Yeah, I mean, for example, on February 6th, right, that was the crazy day in the market. Hyperliquid had almost $3 billion of daily volume. And then February 7th, it hit 153 million. So that was a weekend. Markets were closed, so it dropped a lot. You can just see a lot of how like on-chain perps are increasingly mirroring TradFi demand, but they still kind of fall into the TradFi constraints like market hours, liquidity gaps. But again, guys, for me, hype has been the thing that I've kind of held through my crypto bearishness. If you've been following the show since I was in, I don't know, since I guess since October, in November, I was like vocally bearish. Hype was something that I held on to. It did get dumped hard. We sold a bunch and then kind of rebought. So look, guys,
hype is our number one position in Good Idea Ventures liquid portfolio.
Yeah. So we'll see what happens, guys. It looks terrible. Like the market looks terrible, but Hyperliquid looks good. I actually just saw a good tweet from Crypto McKenna saying that on a PDE ratio basis, Hyperliquid is again under 10x PDE ratio. So it's pretty, I don't know, it's pretty reasonably priced. I also saw a chart of Hyperliquid's revenue versus Robinhood. Also pretty insane. So guys, I mean, this is just something that we're riding in our N7 index, part of our Neo Finance thesis. We have our dashboard live. We will be sharing more about that shortly, but that's all I got to say about hype.
Yeah, let's move on. We've got a lot to get through. Hyperliquid strategies, tickers per, also bought, I believe it was about $130 million. This news hit today because they filed earnings, in which that news became public. But they actually did this, and they were able to get a execution almost at at
25. Meanwhile, on the screen, $25 billion of negative DAT value from everything else.
Well, this
zero above their cost basis, except for Hyperliquid.
Exactly, except for Hyperliquid. So given the news that came out this morning, Hyperliquid Strategies is one of the only DATs that are in profit on their buys.
Hey, I mean, we'll see how long that one lasts, eh? Stay bullish, my friends, but I think there is something to be said about
capitulate.
I think there's something to be said about how if you are in the DAT game, right? You're Hyperliquid. This guy's the former Barclays CEO, right? The guy running a Bob Diamond. You are watching the rest of the market just top blast other assets. There's just no way you're getting in there and thinking to yourself, I'm trying to top blast all like hyper liquid at 50. Like they waited a significant amount of time, whether it was due to their filings or whatever. But that aside, we'll cover that. This is ridiculous. Like I had tweets saying like the DAT trade's going to end in blood, end in tears. People were like, you're wrong. Santi's coming on a bit later. He was like, dude, this thing's definitely going to get cooked. Like this is terrible. This is really bad. So who are the biggest losers here? This is really bad.
I mean, MicroStrategy's below their cost basis now, but not by a whole lot because they started buying earlier. Bitmine and SharpLink have to be down a lot.
Yeah.
And so at what point do these LPs start calling, right? They obviously believe in the underlying. A lot of these contributions were in kind, meaning that, Bitmine and SharpLink didn't necessarily buy the top of ETH.
Yes, they did.
They also received lots of ETH in contribution.
I don't think it was that much.
Okay, we're gonna have to fact check that as well.
I think a lot of these other shitcoin DATs did, but I mean, Tom Lee's down like $8 billion.
Yeah. But he bought like 12 or 15 billion.
Yeah, I mean, led by MicroStrategy here, $4 billion of a loss, trading below average cost basis after ETH and Bitcoin dropped about 30-ish% year to date. One of the worst starting off the year drops in the history of the industry. This post kind of counters, if you guys, I don't know if you remember Joe Weisenthal, he had this bullish DAT thesis, just kind of like this last gasp by quantifying the fallout where, actually it wasn't bullish DATs, where crypto holders traded tokens for overvalued equity just before the downturn, which kind of like amplified corporate balance sheet strains and just kind of struggled further, caused more of this dispersion. I don't know, man. This unwind is like pretty bad, and you ought to think people are going to be having to force sell or dilute their bags here.
I don't know. I mean, how patient are these guys? You've got Tom Lee buying Mr. Beast. They bought the financial company Step. These companies, a lot of them are less than a year old.
Mm-hmm.
I mean, it's insane capital allocation strategy to spend all of the money that you get within a year of being a company. I think the time horizon on these things are a lot longer. And so I'm thinking that if there is blow up, it's because these prices stay depreciated at these levels for months on end.
Yeah.
Like there would have to be a significant amount. They can go use leverage. They can go, we haven't seen a lot of that as of late.
A lot of what exactly?
Like, I don't believe MicroStrategy has issued any more like call options. I don't think Bitmine has really sold that many more puts, which was kind of the funding strategy that they had used. And so I don't believe when they initially raised the capital, my understanding is that obviously they took out, they raised money for the company itself, but then they also took out debt to go buy more of these underlying assets.
Yeah.
I haven't seen a lot of those offerings as of late. So I don't think they've issued a lot of debt as the market's been going down because they don't have excess in their MNAV. And so it's harder to issue debt. But that would be, I think that would send this thing tumbling over the edge. If even though these equities, these tickers are below MNAV, they don't have a lot of room on their balance sheet. And then they go take out debt on that. That is when I think these things get stretched. We haven't really seen that yet.
Yeah, I mean, like I said in the show the last couple of days, it's going to take a couple months for the market to digest what just happened, and bodies will come out, is my take. So until that happens, you guys will be hearing me say, I'm chilling. And then once we get the bodies out, once we get the destruction behind us.
I think it's interesting. Right now, I agree with the take that we're going to be around these levels for a couple months, but I would be surprised if we go, what?
I'm so bullish now. I just keep counter trading you. I'm just going to keep counter trading you, man. There's
I just
actually way less reason to be sufficiently bearish here than there was 3 or 4 months
exactly,
ago.
exactly. So,
People aren't,
like,
so don't be bearish.
it's just a matter of well, I'm not bearish. Actually, I was gonna the end of that point was gonna be I don't think we go much lower. I do think we stay in
Yeah,
this
I don't
like
think we go much lower
choppy.
either.
I think we stay in this choppy phase for a couple months, and it's
Like,
a
I think
matter
we
of
could go
like,
25% lower on Bitcoin.
do you? I mean, we may stretch into the 50s like we did on that dump and just retest the lows, but
But
I
if
don't think we
like
get
mid
under.
40s, like high 40s would be elite.
We might see that, but again, like that is much less of a drawdown than it was from 80 to 58 where it was. So check.
All right, I don't know if that math and Mr. Math Manager. Let's move on. We're just gonna keep speculating about the market here. Here
Stay
we go.
patient. I think these are good level. Like this is a good level. Bitcoin is
You're a good man.
it's
Life's good.
insane.
Just
I don't know.
hold on to your
It's a
nuts.
blessing in disguise to have these levels available. Just have some cash flow, have some dry powder, and stay patient. And you can survive chop. Don't use leverage like Andy.
Richard saying
Proud to
today.
announce our first offering with Franklin Templeton. Yeah, I thought this was interesting because this is core to the whole composability thesis, meaning that Hyperliquid is tokenizing equities, and there's a lot of trading volume that's happening over there. We're seeing tokenized equities, tokenized metals. This is a rising trend, but not until we see those tokens, given those tokenized products, composable with the rest of DeFi, do I think we truly unlock a lot of value here. And that's what I think BlackRock did today with securitizing Uniswap. That's what I think we're seeing here. Franklin Templeton, you can use these things as collateral now. It means that these companies can go and they can borrow against that collateral. And this is where credit creation happens. Binance becomes this lender where they can start to offer margin, and then Franklin Templeton can go use that margin to go create new products and allocate into new assets. So I think
this model would be
this is going to drive a next wave.
So basically, institutions can pledge tokenized money market shares minted via Franklin Templeton's Benji platform, while the assets themselves stay in regulated custody. That's handled off exchange by a platform called Cefu. Basically, this allows institutional grade clients to earn money market fund yields while simultaneously using the same assets as trading collateral without moving funds onto the exchange. So again, guys, vaults and taking off-chain assets on-chain to use them are the two biggest trends that we're seeing right now in neo-finance. And we expect those to continue.
Yep. Yeah. And this is essentially, you mentioned vaults, getting programmable collateral in terms of tokenized money market funds, tokenized private credit. All of that is going to spur this Cambrian explosion of vaults that we believe is coming. Let's keep going. We got more. This is a big news day.
It is.
Robinhood launched their L2.
Yeah, they're
they launched
Testnet.
L2 on Testnet, right?
Yeah.
They partner with Chainlink as the Oracle platform for the Robinhood chain.
Yeah.
This Testnet is live. It is an Arbitrum-based L2, based on what was announced during Cannes of last year.
Yep.
Chain targets financial grade use cases, very similar to the one that we just heard from Binance about tokenized money market funds being used as collateral.
Yep.
24/7 trading, seamless bridging, DeFi primitives like tokenized assets, lending, and perps. All of this is going to be available through Robinhood's L2.
Yep.
And so they'll probably announce and launch their own Robinhood products and apps on top of this chain.
Yep.
I imagine that they would migrate quite a bit of their existing business onto this chain. Remember, there is plans. Is it for Robinhood to launch their own L1, or is it to launch its L2 away from Arbitrum? There was a migration plan here.
Yeah, they were going to launch their own L2. Like
their own
they
L2.
were going to launch some DeFi stuff on Arbitrum.
Right.
And then they were going to launch their own chain. I think they're just going forward with launching their own chain at this point.
Okay. Yeah, that's what it seems like. And so, right now this is still the Arbitrum-based L2 testnet. This matches pretty much what we've seen out of centralized exchanges.
Yep.
Coinbase that has launched the base L2, obviously, and also getting into tokenized equities. And then you have Kraken. They've launched Inc. and have X stocks. So there's this tokenization, adoption curve that's happening.
Yeah.
You see more tokenized assets becoming composable, and the place to do this is L2s. So I think
it's kind of funny. This comes after Vitalik's anti-L2 post In this specific case, though, Rob, this is again Chainlink just kind of being in the middle of where all the institutional flows are meeting DeFi flows. Robinhood has 24 million or more users. Again, trying to bring that into crypto, accelerating real world asset tokenization, accelerating more financial grade rails on crypto. Kind of like a mixed community reaction so far. Strong signal for Chainlink, like, wow, mainstream validation. You guys are working with Robinhood, great. Also, people are upset about Chainlink's price action. People want to see Chainlink pump. They want to see an actual value return to the token from this type of activity.
Well, it's got the strategic link reserve now.
$1 million a week. That's happening.
Yep.
But again, like, this is just a bigger disconnect that we keep seeing in the space, that Chainlink is just now getting the brute dev on the timeline because layer 0 is pumping, and then really just because the market's bad. So yeah,
I think
I think
part of the rationale behind that sentiment is like
the market's down.
Yes. Also, I think Chainlink has an incredible suite of announcements and partners. And it's
All
like,
the time,
okay,
right?
What's that?
Like all the time.
Yeah, exactly. So
Yeah.
like the fact that they're powering Robinhood, it's like
That's just a basic normal thing for them.
It gets diluted,
Yeah.
by the fact that they're also working with the DTCC and federal governments and central banks, and they're doing all these things. Layer 0 has one massive post, leads to one big swell. Chainlink has just continued to push and ship. So look, we're seeing the massive repricing happening of all these assets. We're seeing what sticks out. We are now understanding which DeFi tokens are going to get a bid. There's more coming out of the SEC newsroom that we want to get to. So let's keep going. Next up, more on Robinhood. Public testnet is live. Developers can now build on a financial grade Ethereum layer 2 built on Arbitrum, designed to support tokenized real world and digital assets. And then they drop some docs. And so I'd imagine that, there's going to be some permissionless builders out there that are quite keen on building on top of the Robinhood chain. So
congrats, Robinhood. Pretty sick. We were also privy to this news due to a little bit of a leakage beforehand. So got that thing over the line, and congrats for being on Testnet. Pretty excited to see them go live. I think the sentiment around new change is pretty bad, but it's Robinhood, so it's pretty great. Let's keep it rolling. Just about 5 more minutes until Santi joins us here. Stripe.
Getting into the agentic payments economy here.
So what's the headline here? New system. Stripe launches USDC machine payments on Base with X402 protocol. New systems allows developers to charge AI agents directly for API usage and services using micro transactions with USDC. It integrates a API for programmatic billing, built-in support for sales tax, refunds, reporting, and there's a pay-per-use API access on a lot of these things.
That's on CoinGecko. CoinGecko is moving into a space that I think a lot more companies are going to move to with their APIs, where it's pay per request. They can actually meter the usage of these things a lot better than if it's a subscription model. Like if you look at the bottom of our beautiful bottom thirds here, you'll see some red numbers scrolling across the screen. And that comes from CoinGecko. We pay a subscription per month for that data coming from CoinGecko. If we had an agent that was pulling from that API key, it would be per request. And so anytime we wanted to update that ticker, we would pay a microtransaction. This, I think, is relevant because this is the onset of we're changing the internet at some of the most fundamental layers. We're making it an agent-centric internet. And so this is happening at the browser layer. It's happening at the API level. And I think we're going to continue to see this because eventually there's going to be more agents using the internet than humans, right? And that changes some of the UX starts to become very, very different when humans are almost second-class citizens on the internet. Things are going to be built with agents in mind because humans are going to be interacting with these things much less. And so I think payments obviously is one big thing, but we're going to see a lot more changes as Claude and agents become more ubiquitous.
I like it. Very cool. And then also Dan Romero left for Tempo. I'm sure they're doing a ton of, I've seen him be tweeting as of late about different agentic flows that they're working on, that they're looking to get into as well. So definitely interesting. Yeah. Let's move on from the AI stuff here. Hopefully we can get to Uniswap and BlackRock.
Yeah, let's do it.
Not sure if that's exactly next, but we got about 3 minutes until Santi joins. And I'm stoked on his convo. I've been binging his Substack, one of the only crypto Substacks I've been reading. Okay, stablecoin rules. Yeah, skip. Skip.
For banks to build on open source Ethereum. I mean,
major banks at the top of Ethereum, L2s.
You're an Ethereum bear these days.
ETH to 1,000.
Oh, maybe not.
ETH to literally 1,000. It's cooked. Things cooked.
ETH to 1,000. How? I mean,
thing is so
1,000 when BlackRock is buying Uniswap tokens.
Dude, I don't know, man. I look at Flood's tweets and I just resonate with them. I just can't. I can't do it. I love you though. HIP3. Here we go. Yes, sir. We covered this earlier, but yeah, I mean, pretty insane perps volume. If you scroll down, you can see the actual chart where you can see the cumulative volume in silver perps. Yeah, it's pretty impressive. That insane hockey stick growth obviously correlated with the rise of the silver and gold bubble that just happened. But I mean, pretty nuts.
Well, I think this is interesting to see how Hyperliquid is becoming uncorrelated from the rest of the the rest of the crypto market.
However, OI is cooked. OI is down to about 4 bill. It was at 7 after 1010. It was at 15 bill before 1010.
Dude, that's fine.
Dude, it's not a good sign. OI getting smashed is not good.
It just means that there's not leverage up there in the system. Like, we're getting inflows. You see that they're getting dominance and market share in other categories. This is going to happen. It's happening in the tokenized gold and metals markets. It's going to happen in the tokenized equities markets. We're going to see more inflows, and then eventually leverage is going to build up in the system again. But I think that's why, we're going to chop for a couple months. There's not a speculative fervor out there. Institutions aren't going to FOMO. They're not going to use a ton of leverage. So maybe that means open interest and, overall trading volume is like rather slow and steady on Hyperliquid. And then when there is, 1% rates, the new Fed chair gets in there, cuts, money printing starts over again. Monetary conditions call for more leverage, more risk taking. Until we see that, I think it's just going to be steady as it goes.
Well, I think if we get volatility death, very bearish for perp dexes. Last bear market, we had GMX run because we had a lot of these leverages liquidations and everyone was bulled up on it, and then it died. I don't think Hyperliquid's even close to the same product suite or its team, but something to note for hype holders.
I mean, we're both talking about chop here for the next few months, so chop equals vol death.
No. We're going to get more volatility, I think, in the next 6 weeks. But then after that, I'm a bit worried about what happens next. We should get another big bounce and then another try at a big dump and then
vol death. And then just
chop apathy. Just
once you start seeing the BART pattern, that's vol death right there.
So, all right, let's move on here. Here we go. I can't tell you if it happens in 90 days or 12 months, said Martin Small, CFO of BlackRock. That's 12 months at the outside. If you're wondering what narratives will lead us out of the bear market, this is one of them. Bullish L1s and quite bullish DeFi. Honestly, just don't agree. Just not bullish most L1s. I am bullish select DeFi with revenue. Sky, Hyperliquid, even Aave, if they get their tokenomics stuff sorted out, which hint, hint, rumor mill's humming this week about some things happening there. I think, yes, tokenizing iShares is great, but now we're just doing a full loop here of ETFs, then tokenizing them. It's like we already have the asset on chain. But
no, Andy, you're missing the biggest point that I've been trying to harp on for ever since we've been talking about tokenized assets, which is that once they become composable with DeFi, you end up seeing capital flow into the assets themselves. These things are currently not regulated in the right way. They're not accessible to institutional capital. That's why just today you're seeing BlackRock get into Uniswap. we're gonna see the capital inflows start to permeate throughout the rest of the asset universe, the quality assets, not the shit coins, but the real businesses that have balance sheets that are investable. These things are only becoming available to institutional investors now.
Tokenizing an ETF makes it any more accessible to institutions than just buying the
Sure.
ETF on Schwab.
Sure. It is going to become composable with DeFi, meaning that you
Okay,
can
so that means that
borrow
like
against it.
all these assets, so like they're gonna buy the tokenized ETF version of the asset, bring that on chain because obviously tokenized, and then that's gonna contribute to like the TVL of Aave.
It's going to contribute to the TVL of Aave. There's going to be tokenized, the same reason you saw the tokenized money market from Franklin Templeton as collateral on Binance. That is going to happen from 100 institutions and 100 different venues. And once that happens, it unlocks so much latent capital and margin that ultimately leads to the rise out of this vol death that we're talking about. Because you need to unleash capital. Now, the fact that they're buying Uniswap tokens, BlackRock is,
Right.
that is a choice that they've made to further their investment into the industry. It may be the case, and it's probably going to be more so the case, that Franklin Templeton, Janus, all these money market funds, they're going to allow collateralization of those products. There's going to be margin issued against those products, and then they're going to go into more of those products. Meaning, you tokenize a money market, you use that margin to go into more money markets. You tokenize a metal, the fact that we had this crazy Hong Kong hedge fund, use metals as collateral and then go into this Bitcoin trade. These things were rather, there's sectors of these institutions that want uncorrelated bets. And those might be the ones that do use tokenized hedge funds or money market funds as collateral and then go into more speculative assets. I could also see like leverage looping strategies from these institutions as a much more utilized use case because they're not exposed to exogenous risks that come in from different industries.
I mean, it just sounds like to me you're getting excited that we're all just going to degenerately lever up, that the institutions are going to degenerately lever up on tokenized assets and pump us to the moon. But
you're such an extremist. It doesn't just levering up on shit coins isn't the thing. Go to any bank.
But I hear you though. I hear you.
Think about the fundamentals of money, credit creation, and how money is added to the
I know, and we need it, and it's not going to happen in DeFi
that's
anymore.
margin.
This is how it's going to happen.
That's lenders, that's loans, and
I get it.
More assets become usable as collateral for loans. More loans are issued, more money is created, more credit is created.
I'm ready.
Ultimately,
I'm ready to go.
Leads to a greater monetary supply, and then I can do that math. So can you.
I can do that moon math. Let's move on. Last one of the day. Santiago is about to join. We're going to talk about a lot about the great valuation disconnect and more. We got one more headline for you guys. We got the boy Andy in the cut. Nice penguin. I did not realize this was going to be my tweet. Just in, BlackRock is buying UNI on the market after moving into DeFi with his Buildle product. BlackRock is also purchasing an undisclosed amount of Uniswap's own token. They will also be bridging its treasury-backed digital token Buildle onto Uniswap to swap in DeFi. Guys, this is massive. BlackRock's literally buying your bags. Uniswap ripped, added 600 million plus to the market cap. I think we see more of this. There's also rumblings in the SEC right now that there is going to be a new asset class created specifically for revenue generating DeFi tokens that have immutable smart contracts and have non-custodial properties. You heard that here first. Shout out Jesse from Variant for dropping that with us. Guys, BlackRock's buying Uniswap. I don't know what else to tell you. This is massively bullish. And I don't own any Uniswap, but I'm telling you, the SEC is working on something in the newsroom right now that is going to put DeFi tokens in a much better, more regulated class of assets that will allow large capital allocators to get in. This is massive. We've heard so many times BlackRock's buying our bags. Never actually happens. This time it's happening. Good job, Hayden Adams. Congrats, team.
All right. We didn't think this was going to be Andy's tweet, but he sent it in the curator's chat. I don't have a lot more to add here, except everything that we've already been talking about. Before Santi comes in, let's go to our last headline, because this is obviously the biggest news of the day. We've been talking about it. You heard about it in the last tweet. BlackRock and Securitized tap DeFi giant Uniswap for direct on-chain Buildle trading. Securitized is ultimately the glue that makes this happen. BUIDL is tokenized. So, Uniswap is permissionless. You can add pretty much any available token to its exchange, trade between it. But BlackRock and BUIDL have investor requirements, meaning that, there needs to be certain investor criteria that's met for people to own BUIDL. And so that's difficult to do in a tokenized environment. Securitized is helping with that. Shout out to the team at Securitized.
Yeah, this was out of left field today. I don't think any of this leaked. Unlike the Layer Zero rumor mill, nobody got a hold of this one. There was no insider trading. If you look at the chart, I mean, at least no obvious insider speculation. It was very, very flat. And then as soon as this hit the wire, green dildo. So I mean, look, I'm pretty stoked for Uniswap. Hayden also just beat the Bancor team. They were trying to sue them for some smart contract stuff. He announced that too. So anyways, guys, we got Santi in the back. I've been absolutely fanboying on his Substack last couple of weeks here. Guy's been saying what needs to be said. I like to think that I'm not a big thinker. I'm more of a plebeian in the media game here. But I started this idea of revenue meta, Rob. I put this stupid tweet out, and everyone thought I was the dumbest guy since the dumbest of guys in investing. That was May of 2025. Since then, everyone wants to talk about cash flows, revenue, and why this is the only way to invest. Some could say that we're so low IQ, we're ahead of our time, Rob. Or perhaps that's just me. Let's get Santi up here. Let's get him fired up.
Quite the intro for our friend of the show, Santiago.
What's going on, man?
How's it going, guys? Thanks for having me on.
Yeah, man. The great valuation disconnect, man. Been a hell of the last couple of weeks in the market.
I should have worn my green Patagonia vest repping Inversion. The meme of like you're a fundamental mid curve. I think that's where most people place me now. That I've been mid curving the greatest generational trade that crypto is. But I started being more vocal about the disconnected valuations and adoption in the space. As someone that has invested, I love venture. I think there's asymmetric opportunities. But it is hard to justify these valuations. And since I started being more vocal about it and saying some of the quiet parts out loud, the market has just done that. It's down 40-50%, and I just which is different than saying I still believe in the technology. I still believe very much in the potential of it, but there's just certain things that structurally have made it difficult for tokens to capture value. A lot of it is regulatory. Some of it is design from projects that started early on in 2017. And, you even saw Vitalik say something that a lot of people have been thinking about as it relates to the Rollup centric architecture.
Yep.
So anyways, I think you guys have covered a lot of that. I'm here to just hopefully make it an engaging, entertaining discussion.
Yeah,
definitely.
Absolutely. I think in a lot of ways it must be vindicating to see a lot of what you've been saying play out. You also said that a lot of these things are going to get adoption, but may not accrue that value, from that adoption to their token. Just today we saw BlackRock, this news of them buying Uniswap. This isn't coming from the fee switch or anything, but they have a real business, they have a balance sheet, and now there's institutional investors that are taking a look at them and seeing that as an investable asset class. Does this start to shift your perspective on the thesis, or how do you anticipate this particular trend evolving?
Well, crypto is a very investable asset class, will continue to be an investable asset class. The question is, how do you express that? You want to go long stable coins, you're not going to buy USDC, right? So you have to put numbers on the board. I mean, at some point, you start showing revenue and traction, and you get grounded to reality. So I've been positioned on what I think will continue to, like, my trade and where I'm positioned over the next 15 years. Like, industries that the crypto will continue to proliferate. It is very valuable infrastructure that is going to replace traditional financial workflows. A lot of that is stablecoins. A lot of that is tokenization. Like, money is moving just in time, in real time. That's like just in time manufacturing, just in time money. Like, don't overthink it. Now, the nuance is, how do you position yourself? And I think about, like, crypto, like AI, is super impactful, but you want to be positioned in the right side of the trade. What is not the right side of the trade is infrastructure commoditizes. Like, think about, you're using Claude and ChatGPT and Subscribe to Manus, and like, you have a suite of productivity that you're paying a very fraction. Like, they're competing against each other and they're investing all this money in CapEx. It creates a ton of consumer preference, right? Because you, Andy, you, Rob, like, you're just now way more productive. You don't need to hire 30 people. What I'm trying to say is that the cost curve has gone down dramatically for the consumer. That's what technology does. So you got to be careful to not get too excited in, yeah, AI is going to be totally transformational and crypto and stablecoins are going to be totally transformational. But are you investing in that? Like, are you going to basically lose a lot of your money because you bet on the wrong side of that?
Mm-hmm.
Right? Like, if said differently, to ground the conversation is, what do you think outperforms? A bag of venture investments in AI startups, or the S&P 500 that is able to fire 30% of its workforce and increase margins? Like, what is a better investment over the next 5 years? Like, what outperforms?
Might depend how good of a venture investor you are.
Well, yeah, venture is power law, so there's only like 5 venture funds that actually outperform the S&P.
Yeah,
So
exactly.
It's probably
it's
the S&P.
It certainly is, and that's your thesis. I remember when you said, when you were getting excited about Western Union, people thought you were just the antithesis of somebody who should be a crypto bull. But I don't want to get down that this rabbit hole too much. So I think there's the valuation disconnect. There's the tokens dynamic, which I think people are really interested in, and then there's kind of like where we go. So kind of just to round out the valuation disconnect, we're kind of pushing this idea of, well, obviously I opened this up saying revenue meta, yada, yada. That's obvious. Kind of this convergence point between legacy finance and DeFi being neo finance is really where there's actual value being captured by applications on chain at scale. I know you're an early investor in Pump. We're super big hyperliquid bulls. We are super bullish on Sky. Even things like EtherFi, things like Aave, if they can sort their token, which we can talk about in a bit. There's this kind of cohort of crypto protocols that are not nearly the same value as L1s or even L2s for that, or some of this infra, but is producing significant amount of cash flow and revenue to the tokens with a very transparent, open, public, programmable kind of format. So there's a valuation disconnect, Santi, in terms of the total valuations of chains and of crypto. And then there's also a valuation disconnect, inside of the industry. How do you think about that kind of like that evolving and allocators actually changing where they want to put capital in the coming, months to years as it pertains, not just like within crypto macro wise, but within crypto as an industry inside of it?
Yeah, there's a couple of things, and I'll rattle them off in order of importance. I think a basket of companies that use crypto in the public markets outperforms any token, any basket of tokens within crypto. That is, Figure, that is Visa, that is Stripe when it IPOs, Klarna, all these businesses that are using this infrastructure that we've built over the last 10 years will be made radically efficient. They will cut their costs 20, 30, 40%. It's dramatic, as dramatic as AI. Those equities outperform the tokens that are not capturing value. Because the token's not designed to capture and compound in the way that a stock is. And that's by virtue of the regulatory regime. Like, we've never designed tokens to accrue and compound value in the same way that equities do. And we can get into that. So that's point number one. Like, equities, companies that use crypto are going to be efficient and they're going to outperform the token. Second, within tokens, there is a very big disconnect between where value is being captured and the valuation. So layer ones, the fee that layer ones are capturing has gone down dramatically. Look at Ethereum. A large part of it is like the fees in the L1 have come down a ton, and the value capture has gone down, but they still are a $200, $300 billion asset. So there's a great chart by 1KX which says the percentage of fees that are captured in the system are flowing upstream. They're flowing to DeFi protocols. They're flowing to deepen protocols. Meanwhile, at layer ones, the fee capture's gone down, but they still represent 90% of the valuation. Like collectively, the market cap, excluding Bitcoin, 90% of it is layer ones. The layer ones are capturing less than the share of the revenue. And so to me, that's like that is the trade. It's go long applications, short the infrastructure. But it's tough because infrastructure historically has been where most investors, more venture investors, have made the most amount of money. You're early in Ethereum, you're early in Ripple, you're early in, and so that's at some point that breaks. I don't short because markets are not rational, and I don't want to be caught on the GameStop phenomenon of just getting blown out. There are liquid markets. There's a number of reasons I wouldn't advise anyone to go short, but I do think that at some point, some applications are criminally undervalued. The question is a token the best way to express that trade thesis, or are you better off investing in the lab's equity if you can get a hold of it? Because there's a lot of value leakage. You saw it in Aave last year. You saw it in Uniswap. I'm hopeful that we can. I'm going to say the quiet part out loud. Tokens should be equity, should be designed like equity, and we should call it like that. And then figure out and work backwards from there and say, what do we need to do from a regulatory standpoint to make sure that there's no value leakage? Coinbase bought the team behind Tensor. They didn't buy the token. They bought the equity behind it. That tells you everything you need to know about the disconnect between these tokens. Like tokens, and someone might say, like, there's a couple of people that came at me because I said, look, tokens don't compound. In my mind, they're uninvestable. In its current form, they're not investable. And someone says, wait a minute, Ethereum has a fee burn. You're mid-curving it yet again. I said, okay, well, let's talk about the fee burn, all right? You have all this activity. The world's going to come online. The institutions are coming to Ethereum. You're an idiot because the token is going to be burned and that reduces the supply. You don't understand basic economic principles. I said, well, yeah, okay, I get it. Not so fast, right? Why? Because the fee burn is just that, right? It's like it's not reinvested into the Ethereum ecosystem directly, right? You could argue, okay, like if Ethereum produces $1 billion of fees that year, that gets distributed to people that are staking and validators, and so that's just money out the door. And someone could say, well, that money's going to get reinvested in some way, shape, or form back into the ecosystem. But that is a very hand-wavy argument. I, as an investor, don't like that, because what I want to see is if a company produces excess cash flow, it reinvests that. It either does a share buyback, it either does a dividend, if it can't find productive uses of capital. But most of the time, if a company has $10 million in profit, they're going to go reinvest that. They're going to use that to acquire more customers. They're going to use that to buy another business. They're going to grow top line. As an investor, you should just own shit that's going to compound.
Yeah, I mean, I think that's what really resonated with me about that second post. The first post that you did about the valuation disconnect resonated with me because this is our third cycle, and we had you on back in like 2024. And like one of the things that you said was like, just insulate your lifestyle. And so, that was achieved this time around, and we feel good about it, given that this cycle was really strong. And so it felt good to be on the right side of that. And I think there's a certain euphoria associated with selling assets at, close to highs, and that's great and all. But then this next one about this idea of how tokens don't actually accrue the same value long term that equities do really struck a chord, because when I was first kind of starting any sort of entrepreneur career, there's this guy, Taylor Welch, an internet marketer, and his thing was always wealthy people set up essentially systems which over time, as time passes, they become more wealthy. And the problem with crypto is that I have to be so focused on speculating and trading, buying and selling, as you mentioned, so aggressively all the time. Now, obviously, if you hold some of these assets really, really long term since the early days, you buy and hold still works and holds well for Bitcoin, for ETH, for some of the majors. But a lot of these things are much more it's a trader's market, not an investor's market.
Totally. You have to That's exactly right. Crypto is rewarded traders, not investors.
Correct. And I want to be an owner. I want to be a long-term asset owner. That's my strategy, right? I've got all these different buckets. But crypto, it's hard to even do that outside of Bitcoin, really.
Because the token is not designed to capture value. That's as simple as that. Like if you want to be an early, you want to believe that adoption is going to happen. Whether in pick your system of choice, Hyperliquid, Ethereum, an L2, Solana, whatever. And you want to make your money work for you. And unfortunately, tokens are just not the instrument. They're like I call them they're more like fixed income. Why? Because they're a variable coupon bond. Why? Because the coupon is how much gets burned that year, how many fees are produced by the system. So that might go up, but it's capped. You don't own the equity that is compounding. And I think it's going to suck that in 20 years' time, someone's going to wake up and says, holy shit. So you're telling me that like we grew number of users on chain 100x and stablecoin in circulation went from 10 trillion to 100 trillion. And somehow Ethereum went down 60%. Make it make sense.
What was the quote on the top of the article? Stablecoin volumes went 100x, but our fund only returned 1.3x or something.
Yeah. And look, it's the unfortunate circumstance, and anyone that's been on the investing side understands you want to get out the door as quickly as possible. Yeah. And that creates, it's no different than Bitcoin miners, right? Bitcoin miners, the calculus that goes into an industrial grade miner or even a retail miner, you see it in Deep End, you see it in Bitcoin, is I'm going to spend this money for hardware and invest and dedicate energy, provision energy resources into a system that is going to pay me a block reward. And I got to believe that payback is there in a year's or 2 years' time, because I believe that what I'm putting in and putting out, that calculus is positive for me. But you have a constant amount of sell pressure. So Bitcoin's a bit different in the sense that you believe that it has this sort of store value property. And so you hold it like you hold oil, and you store it or gold because it's valuable. Like gold doesn't have industrial demand. 90% of the demand for gold is jewelry and speculative. That's Bitcoin. Everything else in crypto is competing and trying to be a technology stock, but it's not a stock. It's the worst of both worlds because it's competing to be a stock. So from a momentum standpoint, from an attention standpoint, AI will, for the time being, capture a lot of those flows because it's just a more investable, sexier narrative than crypto is today. That might change. And second, your money's not working for you because you have these people that are constantly sucking money out of the system, right? It's all these traders. And unfortunately, this is kind of where I think most of the projects that were designed in a regulatory environment that did not allow us to design tokens in the way that they should be, which is capture and compound this value, are going to be at a material disadvantage to the next wave of projects.
100%.
And the question that I just was talking to the question that I find myself asking a lot of these longtime builders is like, hey, if you could design your project today, how would you design it differently? And most of the time it comes down to the structure of the token.
Yeah. Well, just imagine Andre Cronje's 2020 valueless governance token Medium article being written today as a launch of a new asset, right, guys? Like, I mean, imagine that.
Yeah, it would look entirely different. And so, Santi, could you unpack what some of those structural differences are? How do the equities compound value into their equity today? And what would the changes have to be to a token structure to compound value into a token?
Yeah. So when you own a token, it's not a claim on the future cash flow. Equities, you're owning a claim on the future cash flow of the system. Tokens, again, distribute fees, but those fees are not direct. There's not a mechanism to directly reinvest the fees that are generated in a system. While it is true, like Ethereum moved a step closer by introducing this fee burn with the IP 1559 3 years ago. The point I'm trying to make is fee burns can be confused to have this property of equity, right? Because more activity, more fee burn, what have you. But the issue is the reinvesting piece. I think you would want to have a system where, in the case of, for instance, Uniswap, you dissolve labs, the token captures the fee of the front end and captures the fee of the system. And then there's the more interesting question is, well, who gets to decide how those fees are either reinvested or distributed to token holders? Because in companies, if you're Amazon and you have excess profitability, or Google's a good example. It's like it was so widely profitable in search, and then it said we're going to invest in robotics and AI and a number of different divisions. And so, if you're an owner of Google stock, you're investing behind a team that is going to be a steward of capital to reinvest that money. And if it at some point decides that it can't reinvest that money, it's going to pay you a dividend. But it's the velocity of the decisions. Like, because in Ethereum, I was thinking about this the other day. It's like it took us like 6 years to do the merge, and the speed by which those decisions happen is really slow. And I don't know what a good solution for Ethereum would be, for instance, in these systems that are very distributed. I've always felt that you should distribute the token, but not the decision making behind the company. And so that's why you see some projects that are a bit more centralized on the product, like Solana or Canton or Hyperliquid. Like these are centralized teams that are, Hyperliquid. The speed by which these proposals happen is quite fast, and you could you're a large part of. I don't know if you ask like 100 people that own Hype. I think a lot of the bet is like this is just a very cracked team of like less than 20 engineers that know what they're doing, and they're going to make really good decisions for the protocol because they own a big part of it, and hope that they're not going to sell. But like the way they ran the stablecoin RFP, well, that's pretty interesting. That captures a lot of value. So it's not a perfect solution, but I would say you probably get comfortable around having a very centralized organization that is running decisions and deciding where to allocate the excess fees, and not just simplistically saying we're going to distribute the fees that get generated in the system to people that are not long-term holders. You know what I mean?
Mm-hmm.
And that's a problem that I see. I think there's a lot of MEV in these systems. There's a lot of parties that are not aligned for the long term. They're not stakeholders. They're just like extracting revenue and then not reinvesting it into the system. And so the last thing I'll do is probably collapse the labs and equity. And look, there's a reason why Deepin hasn't traded well, because like something like Helium, the market understands that. Like that's sort of the other point I want to make is the market's not dumb. It sees that and says, wait a minute, I actually don't own the goose that makes like the golden goose here. I'm owning a token that there's some fee burns, but I don't understand. And that's the Degen Spartan had this like valueless governance tokens meme. And I think it's very true. I think the market's not dumb.
Andy, you're on mute there.
Go ahead, Rob.
So I take it that, we are making progress, just much too slow. Like the Ethereum fee burn was a step in the right direction. It's not a big enough step. And then Hyperliquid and Solana and particularly Hyperliquid with buybacks are a much more direct impact on the underlying token. And so that direct reinvestment into the protocol and into the instrument itself that measures that network's value is closer. Is it still not sufficient? How do you go to what is the next milestone?
Yeah, I think you're flying closer to the sun. Like Mega ETH is now enshrining kind of like the stable coin with Athena that pays for some sequencer fees, and that is interesting. It's not enough. Hyperliquid is also probably closer. This is, again, if you look at what's actually performed well,
yeah,
is tokens that behave as close to equity, and the tokens that don't have not traded well. And Hyperliquid, to your point, Robbie, is as close as you are ever going to get to being like an equity, because it has a team that moves fast, that is willing to reinvest, that is willing to do things like the stablecoin RFP that create more value. There's still, it's not perfect, right? But it's as close to it, and I think that combined with, of course, perps just being a killer category. But to round out this point, I mean, I think again, I want to just validator rewards are not reinvesting; those are operating costs to run a decentralized system. And so paying validators is to secure the network is like paying rent, right? Keeps the lights on, but it doesn't compound value to the token holder. In this, and so that's like, it's just important to internalize, because most people will always say, oh, validator rewards or this is how you get rewarded. It's like equity, and it's really not. And the other point, which is hard to reconcile, it touches on a lot of things, not just like this disconnect between tokens and equity, is like, going back to the opening, you're going to see more and more fees get generated by these systems like L1s. And value will be captured by those people like Aave's of the world that actually own the customer. If Aave actually can become a neobank, they're going to capture a lot of that value for themselves, and the tax that they pay to whoever is providing security on this exit settlement is going to capture a very small percentage of it. The next piece I'm going to write is probably security markets. Like Eigenlayer try to sort of create a better model to price security in these decentralized distributed systems, but it's really hard. I asked, like, anytime an L2 builder comes here, ask them, hey, the amount of money that you're paying back to Ethereum, is that fairly priced? Yes or no? And they'll all dance around it, but I'll tell you, if you look at their body language, they'll probably say it is the biggest bargain in crypto, because you're utilizing the Ethereum alignment is real, because goddamn, it feels great to be paying for a service where the tax rate is like 1%. The real tax rate should be the amount of federal taxes that you pay in your tax bill, Robbie and Andy, which is 30%. Ethereum provides a valuable service, which is security, and I think Vitalik at one point woke up and said, enough is enough. But of course, anyone can pack up their shit and go, right? They can go build in Solana and another system, and that's really the point that I make is I have zero interest in owning tokens, because it's super competitive. It's open source, it's competitive. People are going to go, if you don't like Ethereum and Ethereum jacks up their fee like Tron did, you can go to Solana. And then if you don't like what Solana's doing, you can pack up your shit and go to Tempo.
Yep.
And so again, I think, like, as we think about what we're doing at Inversion, I like that dynamic, because I'm just going to go to the best provider, and infrastructure eventually becomes a commodity. And it's a race to the bottom. And so block space is infinite. It's cheap. It will only continue to be cheaper. And the value that is going to be captured is by the people that build on top of it. And so BlackRock sees that, because they can use Ethereum. It's fairly cheap to use Ethereum, and then they can make way more money. So I would rather own BlackRock equity than ETH, the token, or BlackRock equity than Solana, the token, because it's just a better business model. They capture the fees and it compounds. And so unfortunately, the crypto market is stuck in still trying to believe that, like, infrastructure is a good investment. I don't think infrastructure is a good investment.
Yeah. So the infrastructure commoditization, apps accruing value, token economics being the problem, things like Metcalfe's law, we're basically we're kind of putting to the side for blockchains. But you also made it a point to mention that blockchains themselves aren't the issue. And so maybe you can elaborate on, like, some of the more, let's just call it optimistic or positive result, right? So where do we go from here? Kind of overlay this in the next several years. We, pretty firmly believe that the Trump admin and Hyperliquid, those two events or kind of factors has led to basically this, what's happening now in terms of this valuation disconnect amongst other factors. And now we'll see teams trying to create more what you're calling crypto-enabled equity. So what does that look like in the bull case? What's your base case? What's your bear case here for crypto, for tokens and crypto as an industry moving towards more crypto-enabled equity? What does that look like on a 5-10 year time horizon?
Oh, guys, I mean, don't overthink it. Every business is going to use stablecoins. It starts with B2B, because there's too motivated people to cut costs, and then it starts to B2C. People, you have Gusto, you have Deal, you have all these payment, like employees are going to be paid in stablecoins. Once they get paid in stablecoins, they transact e-commerce in stablecoins. Then you have agentic commerce that uses stablecoins. Then you have businesses to businesses that are sending money and saying, wait a minute, I don't have to send you a wire. I can just send you a stablecoin. And that's BVNK, that's Stripe. So that's the crypto enablement. I mean, I can't. I mean, I am incredibly bullish on that happening, probably faster than most people think. I mean, gosh, January alone, you had 10 trillion of stablecoins moving around. That's more than Visa and MasterCard combined. Visa has probably a better measure of like real economic activity, which is the adjusted stablecoin volume, which is stripping away MEV and some like, DEX activity, DeFi activity. And that's still very high. That's 1.5 trillion of stablecoins that are moving in the real economy. That number grows by an order of magnitude this year alone. Grows by 2 orders of magnitude in the next 10 years. Don't be don't overthink it. The nuance is, how do you express that trade as an investor?
That's always the question.
But I think I created this. So I've been playing around with AI, just because it's like amazing what in a month these things have changed. And now I'm opening a filing cabinet in my brain of ideas because I'm not technical. And now I'm putting them in production, not prototyping, just putting in production. Within 24 hours, I built a new site. I didn't use a designer. I didn't pay them $0. I paid Claude like $10 to do it. Absolutely remarkable. What I'm trying to say is, in many ways, I think AI and crypto are very connected. And if you're wondering how can I actually make sense of this, I think we're at a time where a lot of people are skeptical of different use cases that crypto can power. The focus, of course, right now is stablecoins and stuff like perps. If we just stop there, this industry can grow 10x. But I think there's going to be a very violent shakeup of where that 10x grows. I created, where I was trying to go with AI, I created this, if you want to go online, now it's at fdv.gg. If you want to pull it up.
I'm going. I'm there.
fdv.gg.
What would you rather own? Price is what you pay, value is what you get. I am not a cat. That is weird, but that's fine.
And basically, it's just to make sure that bots, but because it uses machine learning to give you the consensus view once you select. And it's very simple. If we just walk through this exercise, it's would you rather own Solana at a $80 billion valuation or Stripe equity in the private markets at 90 billion? Would you rather own XAI equity before it merges SpaceX or Ethereum? Would you rather own...
Here's an interesting one, Santi. Would you rather own OpenAI private equity at 500 bill or Apple at 4 trillion?
Apple. I think Apple is the dark horse in the AI race.
That was contrarian, 43%.
I had Bitcoin 1.3 trillion or Berkshire Hathaway 1.1 trillion.
Berkshire Hathaway.
That was very contrarian, 20%.
Wow, this is insane. This is a
great
site.
And then it uses. So I built that. I had a project like this because I kept when someone asked me this question, how do you do you want to invest in crypto or not? I think we all agree. My framework in investing is everyone understands the demand side of crypto extremely well. Everyone knows. It's unequivocal that demand is going to grow for block space. Demand is going to grow for stablecoins and other applications. No one argues that anymore. But whenever you're critical about valuations, everyone always goes back to demand. And you're like, well, but that's my point. If you really want to make money, you need to understand the supply dynamics. What are the supply dynamics? With a click of a button, anyone can deploy a chain. So the block space is incredibly elastic. It's not scarce by any stretch of the imagination. It's not like you built a road. There's no moats to these systems other than some sort of mimetic brand value that is hard to wrap your head around that it's worth 300 billion. I'm sorry. I'm just going to call it that. And so I think if you really want to make money as an investor, you need to understand the supply, how that curve, the shape, the slope of the curve, and the shift in the curve as technology advances. And 5 years ago, I think you could have argued demand for block space was there and it is very hard to build a consensus engine, a layer one. It took you, you had to. It wasn't easy to launch a chain. Now it's very easy to launch a chain, and so I think when you go through this game of what you'd rather own, it's always useful to put it in perspective because it frames the conversation not of, as an investor, you don't necessarily have to own anything. You don't have to own a token. You can go and buy Western Union for $9 billion, or you can go buy $4 billion. Sorry, you could go buy, equity in things that are going to use the infrastructure, and I think that's how I disarm a lot of the arguments in crypto, which is you have a really fanatical base that is very, very. It's like a religious kind of experience, right? You're Ethereum aligned or you're not. Don't ever bring up the point that Ethereum is worth 300 billion because you're a mid curve and this is going to the moon, and you're like, fair enough, like to each his own.
Santi, I don't think the robo-advisors have a ideological preference to their asset classes as much as we do, humans.
No, the market doesn't care. The market's not fair. The interesting thing I will say is the pendulum will swing back to new applications beyond stablecoins and perps.
Yep.
I'm actually kind of now excited to start thinking more and more about that. I think that more value is going to be captured from this point forward by newcomers and early and adopters than the OGs that have been investing in the space that are now leaving.
Mm-hmm.
And a lot of them are leaving because they said, gosh, we envision a world where you're going to have a decentralized Uber and a decentralized, Airbnb experience. And, this whole idea of Wall Street on blockchain it's not cool for me.
Yeah, it's not the same.
Candidly, I don't just want to criticize Ethereum because, I was an early investor in Ethereum. I think there's a lot of really good things about the Ethereum community and developer, and it's remarkable what it did in the coordination standpoint. But one thing that's always bugged me is the fact that somehow I feel like the Ethereum insider group, even Vitalik, has sort of been dismissive of DeFi. It's let's explore other more aggressive things. And you've seen a lot of the OG DeFi builders say, wait a minute, man, I'm trying to build something cool here. I'm trying to build something that is powerful. Financial inclusion gets lost in the conversation. Flash loans and new primitives get lost in the conversation. And I think it's why are you neglecting your core customer?
Yep.
That's all. I've never really understood that, right? And it goes back to this idea of why tokens are not equity. You don't have a strong management team that is very aligned in saying, how do we drive the most amount of value for Ethereum? You have these factions within the Ethereum community, and 2 years ago or a year and a half ago, you try to the Ethereum community galvanized and said, let's get our shit together. Because Solana's eating our lunch and other blockchains are eating our lunch. And then so you have now these two different organizations. And so that's the drawback of decentralization, that unfortunately we try to decentralize as quickly as possible everything from validation and block production to product
to the hierarchical.
And I think that's something that I think if someone in a private conversation would tell you, we probably shouldn't have done that. We probably should have stayed a bit more, but you couldn't have done it, right? Because it was a very hostile regulatory environment. So it's not surprising that a lot of the L2s, Hyperliquid, a lot of the new chains are very much centralized from a product decision-making standpoint.
Yep.
Some go even as far as being very opinionated in the applications they could build, right? Mega Eve selected Athena. That's a pretty specific choice, right, by a management team. That, by the way, may or may not be the right choice because it introduces counterparty risk, and if Athena, it is a. But I think that's moving fast is important, and making decisions is very important to adapt to new demand for block space. And unfortunately, a lot of these kind of Gen 1, Gen 2 chains are not designed to move fast and to compound in the way that, a management team and a company that represents an equity will. And the power of compounding is the velocity by which you make those decisions and reinvest that cash flow. Fee burns are not that.
Validator rewards, not that.
Are not that.
And if you think about it, it actually works in reverse, because the time that you spend holding assets which don't have that property of making owners wealthy is time less spent owning assets that could do that for you. And Santiago, Santos, always a pleasure, man. Hope you're spending as much time building out Inversion as you are writing these bangers, brother. So
You best believe we're in the new office. That's our little background in Inversion Green. So we're here, we're building. So yeah, thanks for having me on, guys.
Cheers, man.
Absolutely.
All right, guys.
Always a
We'll take a
pleasure.
quick break and be right back with our next guest. Thanks, Santi.
Thanks, guys.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game. Go anywhere on-chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Havachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz. Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game. Go anywhere on-chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Havachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz. Open, stable, borderless. Frax is building the next generation of stablecoin infrastructure for the digital finance era. Visit frax.com to learn more today.
All right, we are back. We've got our friend RJ from Aligned. RJ, man, it's good to see you. Last time I think we were chatting was DevConnect in Argentina.
Yeah, thank you for having me again, Robbie.
Absolutely.
It's been a while.
Yeah, I mean, you Lambda class in general, Aligned in general, just absolutely crushed DevConnect. We hosted an incredible event together. It was a lot of fun. But you guys also launched like a lot of cool things at DevConnect in Argentina. So give us just a bit of an update on Aligned, and then we'll talk maybe broadly about how the verifiable space is going with AI. You guys are doing cool things with Eigenlayer as well. So just give us a little bit of a heads up as far as like what has been on your radar the last couple months.
Yeah, sure. So for those who don't know, we're building a one-click solution for enterprises and institutions that want to build businesses on top of Ethereum. What that means is if you are an economic actor, right, or a financial service provider in the world, and you want to use a blockchain, in particular Ethereum, you need a couple of tools. And we're building all of them in order to make that upgrade as seamless as possible. And for that, you need rollups, you need wallets, because you need to onboard millions of users, and you also need services for liquidity and DeFi, and that's why we're building a lot of interoperability protocols underneath. So yeah, like the last couple of big updates we had or milestones we hit, and basically we put another product on mainnet, and we completed our CK verification layer. What that means is infrastructure that allows CK rollups or people that use CK, in particular CK VMs, to aggregate many of those proofs and verify them in a very low cost manner directly on Ethereum. And this is a very important milestone for us because it allows us to connect on mainnet the last missing puzzle we had in order to put CK rollups built with Ethrex directly on top of Ethereum.
Incredible. And so, Vitalik has been pretty vocal about how he thinks the rollup centric roadmap, maybe had some weaknesses, but, is still steadfast in building the world computer. Obviously that needs to scale. And now we're seeing, different rollup providers kind of come out and talk about where their perspective lives, as far as where the Ethereum L1 is going and where Ethereum is going in general. I'm just curious. I know like you and Fede are very plugged into everything that's happening within, deep Ethereum. So from your perspective, how are you reading some of the later messages coming from Vitalik?
Actually, I mean, speaking directly from my point of view, but the team generally agrees, we're actually very optimistic about the latest post by Vitalik. And it aligns very well with what we have been seeing or we wanted to see, right? In our opinion, even if we can say we are like tech maxis in the sense that we come from a very engineering background, we always said that we believe rollups were a commodity. Like at some point, it will become a commodity.
Mm-hmm.
So your business model could not depend on having or running one single rollup because your edge was going to be something that anyone could be able to deploy.
Mm-hmm.
So our vision was always the opposite. Okay, if this is going to become a commodity, what we are trying to do is build the best stack for launching rollups, but build it in a way that is easy to launch so anyone can run them. And we help businesses on board directly to Ethereum. So our vision aligns very well with what Vitalik is saying. Like, okay, we have this great world computer that works as a financial backend, and it can be much more than just a financial backend. What are the tools and the applications that we need in order to onboard more people directly to what we believe is the best place to build institutions on the internet? So we were very bullish on that vision, and it aligns perfectly what we have been building. I mean, it's not an easy tech to build, but we believe we're doing it in a way that is going to lower the cost of entry to many people that want to migrate directly to Ethereum. And we already have institutions that are doing that.
I think, this is where we see the space going as well. The infrastructure is becoming commoditized to a certain extent. It's becoming very easy to launch these rollups, and that's leading to, very similar looking rollups, not a lot of differentiation at the rollup stack. Only the ones that are, enabling net new use cases have a value proposition that supersedes, whatever the rollup that came before and comes after is. Another thing that's happening is the L1 is scaling. And I think the L1 still carries an air of trust, reliance, resiliency that, L2s that launch, new L2s that launch, it takes a long time to build up that kind of trust and resiliency.
Yeah.
But the L1 is starting to use, like Justin Drake talked about, snarkification of Ethereum, embedding ZK VMs into the L1. Then there's also native rollups with, these pre-compiles. And I saw you posted recently, Fede posted, you reposted it, the ZK VM architecture white paper that was kind of included in Ethereum's, roadmap by their cryptography team. Where are we at when it comes to the snarkification of Ethereum? And then separately, aligned as this verification service plays a very complementary role. So first, where are we, when it comes to ZK VMs embedded inside the L1? And then how can Aligned help complement that vision?
Yeah, so we are super excited about the roadmap of Ethereum. Actually, we put a lot of resources on it as well, from the Line side, and of course, Fede from the Lambda side literally has engineers working on the latest version of the roadmap for the consensus client, not only on the execution client, but for what is called the Beam chain. And there's already something called ETH Lambda that is working on DevNet, that is already testing and verifying like this new version of Ethereum that is being developed. And it's a very important step into the right direction for what we believe Ethereum should do in order to be super scalable, competitive in the L1 and DeFi part, but also always thinking ahead of what the market is doing. Like every single time that Ethereum had the opportunity to take the long-term approach has played out. And this time, Ethereum is doing exactly the same thing with CK and also with quantum resistance. So I think for people that are not technical and say, okay, like why are people talking about all of this technical stuff from the Ethereum roadmap? I think that the way to think about it, at least that's the way we say it, is, okay, all of these institutions are coming into Ethereum. Everything that we wanted in terms of adoption is actually happening.
Yeah.
We probably can ask for more, right? Like, okay, I saw you guys were interviewing Santi a couple of minutes ago, and he's talking like, yeah, there's an issue with tokens and how we can accrue value directly to there. And I 100% agree with everything that was said. But at the same time, things are happening, and it's very easy to see that in the next year and in the next 10 years, the whole world will run on top of this. So if you actually believe that's going to happen, you cannot make trade-off that benefit the short term without thinking about the long term, knowing that you will have trillions of dollars on chain. And Ethereum is prioritizing and fixing quickly the short term stuff, while at the same time building the most ambitious and future proof roadmap. And so for us, that's like a game changer, because we double down on building in this ecosystem, knowing that the clients that we will bring on board will be in the best place for liquidity, for security, and for future proof. Because at some point, if science is getting accelerated because of AI and every industry is getting accelerated, why wouldn't quantum computers get benefited as well? Right. With researchers being able to have better tools. And luckily, Ethereum is always thinking ahead, and Justin Drake is doing an amazing job with the Beamchain team on thinking how we can do all of these things. And in particular, what we're doing at Aligned is we're building with Lambda and a cryptography research company called FreeMI, a CKVM, with every single thing we learned from helping others build CKVMs and the things that we know we need in order to build the best products on top of Ethereum. So we are designing it with the standards and the things that the Ethereum Foundation is asking.
Yeah, it's a disconnect, and this is what we were talking about with Santi, where Ethereum is executing on its roadmap, steadfast. It has a very ambitious roadmap, and it is successfully accomplishing things day in, day out. At the same time, there's a disconnect from the token that doesn't accrue value from all of the adoption that's happening. And so, yeah, that's a little TLDR from the last conversation we had with Santi. But from the Ethereum standpoint, I think this is why they're going and you're tackling more. I've spoken to a couple people from the Ethereum Foundation now that they're focused on institutions, they're focused on enterprises, and I think they are focused on fixing the value accrual mechanism. And then obviously the cryptography team, their mission has not changed, right? It's just continuing to provide a safe, secure mechanism for the world's computer. And I think, ZK plays an important role in that. And so, January is a big month for you guys. I saw you guys release the proof aggregation service.
Yep.
Tell us a little bit about how you see this going now that it's in production, and generally what the plan is to scale the proof aggregation service?
Yes. So the proof aggregation service is super important for us because it allows us to get our clients that will run on top of our rollups directly to mainnet. Because many of them are not latency sensitive in terms of finality, but they do care a lot about cost, even taking into account that the L1 is scaling and the verification costs have come down. So, for example, the work we're doing with Sobra, that is an identity company that's helping governments upgrade their identity stack, they have their own rollup. This accelerates everything because we have a more robust infrastructure to put this in production. So the Ethrex team at Lambda with the L2 stack and the L1 client are improving out of the performance part of the solution, and we have deployed all of like the CK components that we need in order to put this into production. And we're packaging everything together with a wallet as a service that we already started the development with. So in this case, we will work with, for example, Sobra and say, okay, we offer something super easy where you manage everything from the wallets, the rollup, and we take care of all the CK magic, so you don't have to know anything about it, and we just make you, we just offer you a robust and scalable infrastructure.
What are the so identity? I think is a very clear use case. ZK provides a very clear value proposition to identity protocols. What are some of the other use cases that you're seeing as primary benefactors of ZK, and in particular the Ethrex rollup as a service program? What are they using it for?
So I think primarily, I would think the other way around. Like, what problems people that want to start building on Ethereum or start saying, hey, I want to do stuff with stablecoins, what problems do they have? The people who we are talking, I mean, the market is huge, right? Like, it's no longer one single thing. I don't think the word industry in crypto makes sense anymore because it's too big. But the main things we discuss with them is like, hey, I'm not an expert on this. I just know that this is a new opportunity for me to be more competitive against people who are also building financial services, and that they already have a distribution. Every single customer that we have already has a big distribution, and they have been building with Web2 tools, and they want to use crypto native tools in order to lower costs and build their own financial ecosystem. So when you have big distribution, what you need is a way to onboard millions of users in a very seamless manner to non-custodial wallets. And it should be easy to recover them, and it should be safe. The other thing you need is a scalable backend, because if you have millions of users, I mean, you can try to put that on Ethereum, but let's say you have 2 million users and you're a supermarket chain, and you want to remove the need of a payment provider, like in Argentina, you have Mercado Pago. And it takes a huge cut from their business, but they own the clients because people go to a supermarket because they like them and they trust them. So if you want to build your own super financial app, what you need is the wallets, you need the scalable backend. The scalable backend is a rollup, and it needs to be customizable because depending on the client, on the country, they have different regulations or needs that we need to take care of. So Ethrex comes there because we can offer something performant, but also something that is easy to build on top of and customize. So we can have something with privacy, like what we're doing with Sobra, or it can be like a classic rollup that people are already familiar with.
Yeah, I think this is where a lot of traditional businesses are starting to get into. They're starting to replace some of the cost structures that are just payment infrastructures, financial accounting mechanisms. These are costs and expenses on traditional businesses' books. Everyone will be using blockchains because everyone will be using stable coins, and that is where I think the vector for adoption is mostly happening. And so these aren't necessarily crypto businesses, like you said. It's a supermarket, right? Anyone who accepts payments is ultimately going to benefit from the cost savings and the efficiencies driven by blockchain systems. This was another thing that Santi earlier was saying, and this kind of creates this dynamic where the businesses that are benefiting from the efficiency gains, let's say they're able to their cut, 20 to 30% of their costs, ends up driving quite a bit of value to those end businesses. The services, like the token crypto ZK services, the blockchain services, like how are you thinking about value accrual, especially in this world where equity tokens are maybe different structures? Give us a sense of, given that you guys are still sort of very patient on the token front, how do you think the right way to structure this going forward for compounding value within the system? What do you think the best structure for that is?
So I think there are two components, right? One of them is our strategy takes into account talking a lot with the client and saying, okay, how can we find a sustainable way for both of us? Knowing that we are the experts on the blockchain side and they already have the distribution and they are the experts in their business. So I think one of the things we'll see a lot is revenue sharing. I think that will happen. And the other thing that is very important to understand is, okay, there are a couple of things that we already know that are valuable in blockchain, in the pipeline of what happens with a transaction on blockchain. So let's say we find a way to build all of this infrastructure using Ethrex, our wallet as a service, and everything on a line. If a big portion of the economy goes through our infrastructure, I think part of what we will see is us benefiting from seeing or having that complete pipeline. Like, okay, I go to the supermarket and they say, hey, I have this payment thing, but I also want to have remittances. Because many of the people that come to my supermarket, they have people that live in, I don't know, Paraguay, and they want to send money every month. And they don't want to go to another place because they go to the supermarket every week. Can we provide that? Yeah, of course. I can also provide the financial part behind the scenes, wiring fees, and have the global liquidity. Because what they cannot do is build the global liquidity, because what has strong network effects is the financial component of that part, not the commodity of the payment in itself. So we will try to figure out by talking with all of them what they need, where is the best place where we can accrue value, while at the same time still giving them something that is extremely useful and aligns with their incentives long term. And then, of course, I think they will need to pay for infrastructure, and similar to what happened with the internet, with Red Hat, with Linux, I think Align plays kind of a similar role in that sense. We see ourselves in a similar position to what Red Hat had to do in the early stages of the internet and the web with Linux. But in this case, we're building financial infrastructure, and we can also have at our disposal different tools that they didn't have to offer. It's not just tech.
Man, okay. Well, busy times. Give us a sense of what's coming up next, right? Because you guys are shipping. You're also working deeply with the Ethereum Foundation, building out ZK Tech, ZK VMs. Yeah, where do you think this goes in the coming weeks and months? And generally, what can we expect from Aligned here over the next bit of time?
Yeah, so we're working on many fronts to complete our full stack. So our main priorities is our CKVM that we're building with Lambda and FreeMI. That is going very well. We're very happy with the results we got so far. We haven't made anything public yet from the code or the design yet, but we'll probably do once we complete one of the major milestones that we have in mind. But we are targeting to share some of these things in one of the next big Ethereum events. And then the wallet as a service, that is from the product point of view and the commercial point of view, is something that we care a lot about, because that's what people need the most currently from everyone we're talking to. And that's coming up very well. We already have a first version, and we are talking with one of the first clients to see how we can touch the last details and see what's the best way to put in production with them as soon as possible. And I would say people to keep close attention to what we're doing. Apart from that, I think we're moving very fast on all the go-to-market strategy. And we are trying to offer an Ethereum kind of aligned solution to many of the things that we're seeing in the market. That Layer 0 is trying to do something similar with a different tech stack. We believe Tempo is a similar play with a different tech stack as well. And we are trying to build the competitive stack in order to help the world upgrade to Ethereum directly, because we believe that's the best solution for most of them.
Yeah. Incredible. We saw how those announcements went, and I think you guys are also building towards this future that we're seeing play out in real time. RJ, man, always a pleasure. Thanks for
Thank you,
being
Robbie.
such great hosts during Dev Connect. It was a lot of fun, and I'm looking forward to being back there again soon.
Thank you, Robbie, and thank you everyone from the Rollup. You guys have an incredible show.
Thank you, man. Always a pleasure. Cheers.
Bye bye.
All right, guys. That's our show. So we had Santi and RJ come on today. ZKVM's obviously at the deepest part of the stack. Hearing some conflicting things, Santi is, not so bullish on the Ethereum token, but obviously we're seeing adoption happen. These guys are, leading researchers, cryptographers. And so, when it comes to how much adoption is able to be generated via Ethereum's protocol, all of the L2s, all of these things, there's tremendous amounts of value that is happening on this chain. When it comes to how the value accrues to the token, you heard Santi say that, the burn is not sufficient. There has to be more direct impacts in how the value will compound for the network itself. So we'll see. We'll see if Ethereum community can figure out the economics here. Another great show. We are going to not stream tomorrow. And then we've got a heater for you guys coming up on Friday. So we'll be here on Friday. You guys are not going to want to miss it. An absolutely stud lineup. And we'll see you there. Thanks, guys. See you next time.